we have Ryan Jones and Kundai Zimbiti. So a bit of intro, and then the floor will be theirs. So a little bit on Ryan. So Ryan, as a director of CFC, Ryan has more than 10 years of experience in cybersecurity, building specialist forensic teams and helping financial organizations to respond to sophisticated cyber attacks. Kundai leads a team of data scientists and actuaries delivering innovative and cutting-edge AI and machine learning to enterprises. He has more than 10 years of experience in analytics, building high-functioning technical teams. So please welcome Ryan and Kundai, please.
Thank you. It is very good to be here. It's the first conference I've spoken at since COVID, and it's very nice to be doing something in person instead of in front of a green screen in a studio. So that's good stuff. So Kundai and I are going to take you through It Starts with a Water Skiing Elephant. Kundai, as I said, heads up the data science function within CFC, and my role within CFC is to lead the Insight team, and we are a big data collection team. I thought it's worth introducing CFC to you because we're probably one of the least known companies from a brand perspective here, and telling you what we're really about. Now, you think about insurance, and you probably think home insurance, car insurance, life insurance. That's not us. We are a specialty insurer, and our focus is on small and medium businesses, usually primarily in English-speaking countries across the globe. And cyber is our big area of expertise. So around half of our insurance policies are cyber policies. Around 70% of our insurance policies have some aspect of cyber in it. So that's why we're talking about cyber. The other thing you might not know is we are a homegrown London unicorn. We've recently been valued at 2.5 billion, so we're a decent-sized company, and quite novel for a unicorn. We have profits, which is pretty interesting. So let's look at the talk name. It starts with a water skiing elephant. Are we okay with slides? We're not okay with slides. Uh-oh. Well, this man's going to come and sort the technical side out, and I'm going to keep talking. So where did the talk name come from? Well, I was being shown around Lloyds of London. And Lloyds of London, not the bank, is the oldest insurance market in the world. And Lloyds of London is somewhere where they will write almost any kind of risk you can imagine. You might have heard of, someone's insuring Ronaldo's legs, for instance. So we asked the question of the person that was giving us this tour, who is sort of an underwriter in their 80s, who still enjoys giving tours of Lloyds, can't leave work ever. And he instantly answered the question. He said, the craziest thing I've ever insured was a water skiing elephant. And I did not believe that a water skiing elephant existed. That sounded absolutely bonkers. Later, I went home and Googled this, and there is a water skiing elephant called Queenie. Unfortunately, I can't show you Queenie, the water skiing elephant. I can see it on my screen, but just imagine it was there. Okay, it's coming. Maybe. Or my desktop is coming. One of the two. Let me try and share this. Hey, there is Queenie. There is Queenie. Now, this was a great idea in the 60s to put a terrified elephant on water skis, but perhaps not something we think is such a great idea now. But don't worry, because I asked our marketing department, and they produced this happy chappy, who I definitely think is enjoying being on water skis. So it got me thinking, how do you go about writing an insurance policy for the very first time? Someone comes to you and says, can you insure a water skiing elephant in the 60s? And you think, well, no one's ever done this before. I can't look at the claims I've looked at in the past. I've got no idea how to do it. And you just have to take a big punt. So every insurance product starts with water skiing elephant insurance. Whether that was, say, in the 1700s, when at Lloyd's they were getting together and saying, hey, you know what we could do? We could insure each other's ships. And then if one of our ships gets sunk, we'll pay each other out. No one's ever done that before. That's crazy. How do we price that? And then cyber, what we're a specialist in, started the same. You know, someone in the 90s said, hey, you know what? I might get hacked, and I'd like some insurance for that. And the first person that ever wrote cyber insurance, well, they had to take a big punt. They just had to take a guess on that. So as we move through the maturity, you get to something like cyber insurance. CFC have been around for 20 years now. We have a lot of cyber insurance experience, probably more than anyone else in the market when it comes to SME risks. And we've collected information on the claims. We've collected information on the data that's been submitted to us, and we've decided what to write. And we've been able to bring that all together. So that's where we are now. And then as you mature further, you get to something like health insurance or maybe life or auto insurance. And at that point, then you're in a position where there's a vast amount of data available, but everyone has that data. If you think about, there's health data released by governments, everyone has access to that. There's loads of previous data on claims. And when you start to analyze that data, there's only minimal improvements that you can make. It's marginal gains territory. But what you should take from this is more data gives us better decisions. Gives us the opportunity to make better decisions. But the next thing is more data than anyone else is an opportunity. If you've written 4 water skiing elephant insurance policies and someone else has written none, you have more data than them. You can make a better decision. Was it a disaster every time you wrote those 4 policies, or has there been no claims? You can make a better decision. And this is where we are with CFC and cyber. Because we have more data than anyone else, we have this big opportunity. But what data does an insurance company have? Well, obviously there's the data that people submit to us on proposal forms, type into web forms to get insurance. We've also got that claims data as well. But we've got one more thing that's really a game changer, and that's what my team heads up. This is the data we collect about our customers that they haven't given us. So it's data that we go out and get ourselves. So I call it a game changer, and that sounds a bit grandiose. But let me take you away from cyber and give you an example of how it can be really game-changing. So in 2016, Whirlpool found that 800,000 of their tumble dryers were in people's homes and had faults with them. And they could just get set on fire, and this is what people came home to. If you think about how many times you've bought some good for your house, some hairdryer or a washing machine or a tumble dryer, how many times have you registered that and got your guarantee? Whirlpool had no idea who had bought their tumble dryers. The fire service had no idea who'd bought their tumble dryers. The insurers had no idea who bought their tumble dryers. And the only thing they could do was try and get as many stories out there in the press as they absolutely could. And think about that process. They're hoping that, one, the right person reads the story. They think, oh, maybe I do have that problem. They then go home and look at the tiny little model number, sometimes on the back of their tumble dryer, typed it in to a web form and checked whether they had the problem, and then booked someone in to service their machine. This is long shot territory. How different would that have been if Whirlpool knew exactly who bought all their tumble dryers and could send them an app notification message saying, hey, you've got a problem, press here to book in your service. This is what we're doing at CFC. Earlier this year, there was a vulnerability called proxy logon. This was a vulnerability with Exchange email servers. And everyone was vulnerable. Everyone was vulnerable as it was being hacked. And the reason for that was because it was being hacked even before there was a patch. There was a patch rolled out, And we knew that lots of our insureds were going to have this problem. We have a cyber threat analytics team. Their job was to find this problem. They came to me on a Saturday, because it's always a Saturday, and said, right, we need to know who's got this in our portfolio. Which of our insureds have this problem? 2 hours later, we had a list of every single insured that had the problem, and we were able to either send them an email or notify them through the app, because we have an incident response app that we give out to our clients with this issue. We were able to then monitor that day by day and see the number of vulnerabilities going down. The really scary thing was we were also able to see day by day the attackers trying to hit our clients and trying to hack them. And we ended up with this sort of high-tech tug of war where we were both trying to race for the finish, the malicious hackers and us trying to protect our clients. And in the end, we were able to demonstrate that we were really protecting them. We weren't just paying out when we needed, when the insurance said pay out, which is obviously a great benefit, but we were stopping them getting hacked in the first place. So what this really boils down to is we use data to move someone's house out of the path of an oncoming hurricane. And it's pretty crazy to think that we can use data to do this. Now that sounds really easy on the surface, but there's lots of problems that sit beneath that. And Kundai and I want to take you through some of those problems, some of the solutions we have, but what we're still working on as well. One of the problems is I give Kundai a big problem of lots and lots and lots of data points, hundreds or thousands of data points, and then the question is which ones are important. So let me take you through a few of those data points, and then Kundai can discuss how he does the analysis on the back of that to make this meaningful, because it's easy to collect bucket loads of data. I know I do it. But it's difficult to try and understand what's important. So one of those things that we measure is no DMARC. This is an email spoofing protection. If you have DMARC, it's a lot more difficult for me to send a malicious email pretending to be you. Another one is RDP. This stands for Remote Desktop Protocol, and it's a way of logging into a computer that's not in front of you. It's supposed to be used internally within a corporate network, really, but people put it on the internet, and it's got some pretty significant weaknesses. And the last one is no HTTPS. So this is that data is not encrypted between you and the website that you're visiting. So we all know that these are bad, right? It's good to have email spoofing protection. It's good to be able to log on, but only securely. It's good to have encryption in transit. The other thing, but what we don't know is if it's material. Do these actually lead to data breaches, and how often do they do that? The other really key bit of information is how many of our clients have this. Because with something like RDP, it's quite a small minority. With something like DMARC, then lots and lots and lots of people can be lacking this control. And this is where I'm going to hand over to Kundai, just like I do in the real world, and go, here's all the data, tell me where the value is.
Thanks, Ryan. So maybe I should frame that problem with a few numbers. Ryan has touched on 3 examples. We can probably say 4 with the proxy logon. What if we had 5 features? What if we had 50? What if we had 500 features? What would you do then? Turns out that's exactly the problems we face day to day. On our cyber portfolio, which is about 40% of what we do, we collect up to 500 individual different data points. So the question I'm constantly asked is, how do you filter through that list to choose one? I actually think the problem is slightly more complex than that. There's 2 questions I always need to answer. The first one is, if I have 500 features, which one is the one that's worth targeting? But then the second question is, which new features do I want Ryan to go and search out for? Because our data is growing both in breadth and in depth. As he mentioned to you, on a weekend, someone can come up to him and say, Ryan, add this new feature, and within 3-4 days' time, we have an additional column in our data. But we're also asking him to give us that data faster, more frequent, more reliably. So these are questions that we often face. Now, some of you may have heard of the 6 V's of data. I think this is a simple, reasonable framework to use when you're deciding that. Now, not all of these affect us. CFC, for example, the first two, I would say, are non-issues. Think about volume. Do I really care if we have 5 or 500? No, I want as much data as we can have. So for us, we're not strapped for cash. We're not trying to pinch the pennies. If our IT need to give us facilities to handle 500 features, then we'll ask them to do that, and they will do it. Same thing with variety. I want the most useful piece of information. So it means whether that's an email, whether that's a PDF, whether I need a document type database, irrelevant to me. I want that data at my fingertips, so they deal with that. So what do we actually worry about? I wanted to use the example of RDP, which Ryan had touched on before, because that's one actual thing that we ended up actioning. The first question we asked ourselves was value. If we looked at RDP over a period of time, was it giving us valuable, actionable insight? We relayed that data against our claims information, and we had a chart that looked something like that. When people had RDP, they were 5 times as likely to make a claim than when they didn't. So that value statement had been achieved. Now, 5 times may not seem like a lot, but when you think of an SME type of client, that's the difference between 10 claims at £1 million and 50 claims at £1 million. So for us, that was a big deal. Then we thought, okay, we know that RDP is useful, there's value in it. How often can we get this data? This is the benefit of not using vendor models. See, I have the benefit where if I think RDP is useful, I can say to Ryan, can you collect that for me every day? And I might look at something else that he had there like DMARC and say, not as risky, can you collect that on a quarterly basis? So we get to control and filter the speed at which we're updating our databases. Then we had to ask about veracity. For most of you who've ever queried an API, you know the typical output you get. Most times if you use someone else's data, you get a flag that's true or false, binary. I can ask Ryan when I see a false flag, what does false mean? Did you receive a null result? Did you receive a blank? Did the query time out? What exactly do we mean by null? So we get to trust our data more because we have the ability to scrape the data ourselves and decide exactly how we deal with that. But then probably the biggest challenge we face when we're deciding on which feature to target is this last point, which is variability. For those who are not too much into cyber, I'll give you an example. Say you take an SME client, 50 million revenue. You might find that they have 3 or 4 domains. Those domains may have 50 to 60 subdomains, and those subdomains may be linked to hundreds of IP addresses. So there's a very reasonable chance that for any typical client we have, there are 500 IP addresses, of which I'm asking Ryan to go through each and every one of them and scan for specific details. So a lot of decisions we then have to make are, what data is useful and how do we structure it? If I get 1 hit for RDP and 500 are not, do I consider that to be bad? Do I give it to the data science team as a flag of 1-0? Do I give it as a proportion? These are all the complexities and challenges that we often deal with. Probably a good time for Ryan to pick this back up and sort of talk you through how he handles that and how he supplies the data to us.
Thank you, Kundai. So, oh, sorry, slide trailblazers. There we go. Back to where we were. So, that's great. It's nice to get this data. Kundai says RDP is really, really important. Now, know the answer for every single company that could possibly come to us. Unfortunately, we could write insurance or be asked to write insurance for any company on this entire planet. And trying to get that data in time, which for lots of our work is API based, so it's effectively a handful of seconds, is a real challenge. Why don't you just collect the data on every company on the planet? Well, unfortunately, drinking the internet requires an internet-sized stomach. No one really has any of this data at that scale. There are organizations that try and do this, but they tend to break it down in certain ways. So we'll have organizations that provide company data, but they will only do it for publicly listed companies. So only the big ones, not very useful for us. We have companies that will do it, but only for US companies, for instance, and they haven't got any coverage for the rest of the world. But that's not good enough for CFC, because all of these are just slices of our problem, not the whole problem. So the other way of doing things is you say, well, why don't we collect it on demand? Don't get all of it, just get what you want, but let's get it quickly. And that sounds relatively straightforward, but here's the big problem. How much data do we need to collect? How much, when you have that point from someone saying, okay, here's some data I want to quote for this company, and you have to come back 2 seconds later saying, here you go, here's your quote, just as you would expect if you sort of did your personal policy online and sort of send information off to confused.com or similar, and then you get your quote back really quickly. The problem is scale. So you might get a question like this. Can you just check whether this company's servers have problems? Well, the subject is really important. So let's take, say, a fancy hotel. They probably don't have many systems. You know, they've got some tills, they've got one website, and if anything particularly out of the ordinary. But you can unfortunately get things that look very similar that are actually very different. Disney is not a fun company to try and find all of the domains for and all of the IP addresses for. Every time Disney make a film, they set up a website in every country that they launch the film in. And then when they get big franchises, they do crazy things, like hey, in Malaysia, we'll do a Visa card that has Star Wars characters on it. The number of different domains, IP addresses, is absolutely mind-boggling. I only know this because during our early stages, we tried to do Disney, and everything just ground to a halt. So we learned how to tackle these problems. What we realized, however, is that you can break down this problem. So I call this compartmentalise and parallelise, if I can say it properly. So what we realized is you start with this input. For us, this is a company name, but we've built a generic process around this. And then that thing has assets. So it could be other things. Could be, if you're looking at sort of doing something like terrorism insurance, then you're worried about where their different assets, their organizational headquarters is, their shops, for instance. But for us, it's domains, IP addresses, things like social media. And then we want to ask questions of those assets. Does it have this security feature? Or, are they using this technology? Because they could all be something that we're really interested in. So we make measurements about those things. And then we consolidate those. We bring that all back together. So if you work one of those through, for instance, you could say, okay, we've got a company. We're going to the hotel that we're looking at. We're going to find all of their domains, IP addresses. From that, then we're going to check each one to see whether any one of those has, or check each one to see which ones have RDP open or not. And then we have to consolidate that back together. Is the question that we're trying to answer, is there anything with RDP? Or what proportion have IDP? You bring that back together. And by doing that, you can then take something with 1,000 IP addresses, break that into 1,000 assets, ask the 1,000 different questions of each one of those, but then also ask 20 questions of each one at the same time. And you start to get this opportunity to massively parallelize what you're doing. So we've built a system that allows us to smash the problem into 1 million different pieces. And then we use a lot of cloud computing. I don't know quite how we'd survive without Amazon Lambda. To then go and ask for it all at once. An example of this is we did around 2 million web page scrapes recently in an hour or so. So that was possible for us to look. It was for a new vulnerability. We looked at our sort of internet footprint data for all of our clients, picked out a specific part of the internet footprint that was valuable for this vulnerability, checked all of them, and then collated that data. And this was one of the things like proxy logon that we were able to report on very quickly. The big problem that comes for that is if you ask for 1 million tiny bits of data, 1 million tiny bits of data then come hailing back at you at speed. We used to do this with a web server that we set up on our data collection infrastructure. So we would go and ask for everything, And then all of that data would come back, and we caused a denial of service attack on our own web server, just because of the vast amount of data that was coming back. So we don't have the web server anymore, but it's all a learning experience that we have to go through. So this process of gathering the data, breaking it down into lots and lots of small pieces, is what then allows us to have that flexibility to increase the frequency in which we collect. And it also gives us the opportunity to collect new data very quickly. So if you were to compare this to an organization that sort of tries to drink the internet, they will have someone come to them and say, it would be great if we could collect extra piece of information X, whatever that is. New vulnerability is a great example. And you think about the problem and you think, okay, well, how are we going to collect that for the entire internet? Okay, let's try and collect it in this way. Maybe it's possible to do it this way. And you work through that. You collect the information for the entire internet for this one tiny data point. And then you weave it back into your current data sets and say, well, which different clients are they attributable to? Which different companies are they attributable to? And then when you've done that, you say, okay, how do we get this to the outside world? How do we get someone who needs to query this data? How do they get access to it? And you sort of put something new on your user interface, for instance, or a new piece of, you change your API to present some more data back to the client. That is a lot of work. That is days, weeks, potentially months of work, depending on how difficult that data collection piece is. We turn that on its head somewhat and say, well, I only need to collect the data for the companies that I need to. So what I need to do instead is create a small data collection module that efficiently collects that piece of information for one single asset. Then I plug it in. All I need to write is the small data collection and then this consolidation piece and say, okay, well, I care if anything has that problem with this client. That's all I need to do. We roll that out to our production systems, and then any new inquiry that we have, we're checking this for. So this is something that we've turned around in 24 hours for critical issues before. We've been able to do this and say, yeah, we know there's a problem. We're dealing with it across our current portfolio. And within a day's time, we can say every new risk that comes in, we know whether they have it or not. We can help that client to solve that problem, to fix that issue before we provide insurance to them, that makes them more secure and manages our risk. So this data is then what supports some of our next steps as a company, and one of those next steps is autonomous underwriting, and Kundai is going to talk to you about that.
Thanks, Ryan. Autonomous underwriting. So this is a project that we're working on for the next few years. About 8 years ago, Elon Musk had a vision. He was at an annual shareholders meeting, and he stood up and he began to describe something that he called the alien dreadnought. It was a factory. And in his vision, he imagined a time where Tesla cars would be built from start to finish with no human intervention. Think about that idea, being able to fully automate the whole process. That's a great idea, extremely hard to implement. But it turns out our board had the same exact thought. What if we could take the insurance journey and automate it? Here in this messy diagram is the typical journey. The circles in white are things that require human beings to do something. The other circles, squares, I guess, are areas where we can use softwares and systems. Now, some of these parts, like presenting a quote, or then underwriter is doing something, you can automate that. But for us, we see a difference between the word automate and autonomous. You see, we can automate any of the other boxes, but the circles, that's a human being doing something. That's someone thinking outside the box. When you see that lead underwriter being passed the referral, he or she is looking at that risk and making decisions based on that. This is where we're going to. You've heard the thought before, give a man a hammer, or if he only has a hammer, every problem looks like a nail. And for us as data scientists, that's exactly what we see, just big ML applications. But we had a thought, similar to what Ryan said earlier. What if we took that hammer, smashed this problem into tiny bits, and then began to assign them in bite-sized chunks to different parts of our data science department, so that they could work on perhaps just one segment on how we present the quotes, rather than the whole application. What would that world look like? This is also one of the reasons me and Ryan are here today. What are the things that are keeping us awake for the next 12 to 24 months? What are these bite-sized chunks of things that we're working on? I wanted to highlight 4 of them. Think of a typical insurance journey. The first thing is data ingestion. We do not care if it comes through email, broker API, whether they're using our website. We don't care if they type it up or they write it on a form, handwritten, and then scan it and send it to us. We want the ability to be able to take everything. Because the reality is brokers aren't here to change the way they do things. It's up to us to be able to harvest everything they can bring to us. So we need teams that are going to be working on things like NLP, reading those emails, finding the intent of what they want. Is it a renewal? Is it a new business? People reading PDFs that are handwritten and trying to extract critical information. Once we've done that and we've ingested the data, then there's the verification. Now, this is somewhere where I can highlight the difference between automate and autonomous. See, an underwriter can give us a very simple rule. If the revenue was 10 million last year and it doubles, it's probably an anomaly. But what happens if it goes from 10 to 16? Where's that cutoff where you say it's an anomaly and it's not? Sometimes it's not even that. Sometimes the revenue seems reasonable, but not for the type of industry. If I had a client who was called Joe Plumbers, and he told me he was a one-man band selling 500 million in revenue every year, that would classify as something that's odd, but very difficult to just write in rule sets because there's an infinite amount of them. So we need people who will be working on things that are a bit more complex, trying to find out how does an underwriter look at a risk and decide this is something I want to write and this is something that's risky. Then we've got the typical needle in a haystack. Ryan spoke earlier about the number of features that we could be scanning for. We're always looking for that next feature that's going to be useful. But in the world of everything we could scan for, even with infinite resource, there's just too many things to look at. So having people who can do proof of concepts, look at the data we have, decide where should we be focusing our attention. These are some of the projects we're working on. And then lastly, something that most of you will be aware, optimization. We are in company after all, selling insurance. It's not just knowing where the risk is, it's being able to price it appropriately. Looking at things like our retention, our conversion, our new business. Where can we help customers better? What can we do with the information we have? So these are some of the problems that we're looking at in our vision to automate the business. And I'll probably ask Ryan if he can come up, and then we can close off together.
So we didn't properly introduce ourselves at the start, and I thought we should get onto the meat of our presentation before talking about that. You guys wanted to hear about the elephant, right? That's why you're here. So we thought we'd just close with a bit of background to ourselves so you can understand the kinds of people that work at CFC and what we're here to recruit for. So from a team structure perspective, if you look at this as sort of a rainbow of different jobs that we need to do, you've got at one end you've got programming. We need to produce production systems to make all of this stuff actually useful and work in the real world. We need data engineers as well. We need people that are able to understand, okay, we can collect this vast amount of data, but we don't want to store them in a bunch of text files that no one can get to on some server somewhere. We need to be able to structure this data in a way that allows either production systems to get value from it or the analytics teams to get from it. And those are the pieces that sit underneath what I do. Kundai's teams, on the other hand, are looking more at that data analytics side, how to find the real value from it, the machine learning side. Anything you want to add, Kundai?
No.
Okay.
All the interesting stuff, right?
Well, you get to do the best stuff, right? So, in short, I get a bunch of data. Kundai tells me it's not good enough. Work harder. This is how the relationship. This is how the relationship goes. So we're recruiting across all of those functions, and let's be honest, that's why we're here. That's why we're here today, to find those people and to attract those people. A little background on myself, because I think Kundai and my backgrounds are very different of how we ended up at CFC. So I started out with a computer science degree, then moved into computer forensics, and then I really enjoyed investigating data breaches, primarily around credit card fraud. So people would have their website hacked. There would be an understanding that there was a lot of fraud on cards going through that website, and I was sent in to work out what was going on. So a lot of log file analysis, a lot of really seeing on the coalface, if you will, what hacks are actually happening to companies. Fantastically interesting. Not so interesting 6 years later when it's exactly the same problems being exploited at exactly the same time. And I was feeling a bit I was a bit done with cybersecurity because it just felt like the world wasn't listening to the to the problems. But then I found insurance, and that may sound strange because you may think insurance is boring, but I would say you are very, very wrong to think that. You're very, very wrong to think that. It was a brand new way of thinking about the same problem. So cybersecurity was now not a thing where any issue is a problem. It became something where we're looking at this in the round. We're saying, what about all of these companies? Which ones of these companies have issues, and how do we accept the risk and help people share their risk? So it's not a disaster for any one company, and that was a real opportunity. I set up a startup trying to collect this information and doing effectively what CFC Insight was, and CFC said, that should be a part of our business. So they acquired what was called Threat Informer at the time, and has now become CFC Insight and that data collection and analytics, and that big data collection team. Kundai?
Yes, I think mine is simpler than Ryan's. I think I've always searched for the silver bullet. So I started off at Direct Line, which at the time was a big juggernaut. You had all the data you wanted. The pricing team was like 200 people. And I found that we had a lot of data, but it was very hard to find anything that would significantly shift the portfolio. So I kept moving away from personal lines, high volumes of data, into industries where there was perhaps not as much data. You had to think a bit more outside the box, be a bit more creative. And eventually I landed at CFC, and as you can see, we're trying to employ all those personal lines, data-heavy techniques in an institution where we feel that there's a lot of room. You know, we can find silver bullets. We can find that one feature that's going to transform the industry and transform our P&L. So for me, it's really been that journey, just trying to learn as many techniques as I can and find an industry where I can really add value to it.
Awesome. So I hope you've enjoyed learning about water skiing elephants, even though that was only about a minute of the presentation. I make it 11:39, so we've probably got time for 3 minutes of questions, something like that.
You even have 5 minutes.
5 minutes of questions. Ah, bonanza. We got a question.
Yeah, hi. So first of all, very interesting talk, so thank you for that.
Thank you.
I have entered the niche market for you. So I'm actually coming from a non-profit insurance company.
Okay.
That is basically having got this with the indemnity issues. We actually face very similar questions in terms of sort of like getting medical data. And I think from our world, which is slightly different from cyber, but at the same time the same, in the sense that it would be quite hard for us to get data, and many of the data are kind of like private, as in sort of like sensitive third-party data. I wonder if you have come across this kind of like data ownership or data sort of gathering issues.
Do you want me to do that, or do you want to?
Yeah, you crack on.
Okay, so the question was, as in your world of looking at medical data, there's a lot of sensitivities around that data, and there's a lot of challenges around collecting it for privacy reasons. I'm not going to give a very helpful answer, unfortunately. The great news is, for us, is that we're collecting information about small businesses. We're not focusing on collecting data about people. So there's so many challenges that are there from a privacy perspective, and of course those privacy laws are very, very good to have, but they're not very helpful when you just want to collect all the data and do all the processing without telling anyone. Because of what we do, we never collect information focusing on people. So our question is never, tell me about that person, get me information on that person. It's always, tell me about that company and the websites that they have and the assets that they have. And what that means for us is we don't have to worry about that very much. Obviously, we have to make sure that we're operating legally, that we're doing everything above board, but it means that our privacy challenges are far less.
Yeah. Can I ask one further question? Yes. Okay.
Yeah, sure.
Yeah. So if that's the case, then obviously NHS after the pandemic released a lot more data than they used to, which is good news for everyone. And then it's kind of like, okay, now I am swarmed by all this new information. And what would be your advice, or sort of like, do you have a sort of like set procedures in evaluating sort of like what you're going to ask Ryan first?
Yeah, sure. I mean, I can pass this back to Ryan, but I think in my world, yeah, that's a good question that we face all the time. And it's not just that as well. It's the fact that we have access to the same data everyone else has. So there are recognized vendors that give us a service of data, but all our competitors use it. So you can imagine when we're in meetings and we're trying to demonstrate value, being able to say we got RDP information from company X is not useful if everyone else has the data. So I think the challenge is also a good one because it means you always have to be constantly enriching to get better information than the next person. It's very difficult. We have some set processes, but beyond us just looking for something that we believe no one else has, there's not much you can do with public data because if you don't use it, then you're kind of suffering. So it's almost defensive. If it's there and you're in that market, you have to use the data. So I think that's one thing that we face as a challenge. But again, with insurance industry, it's constantly evolving. You know, I mentioned that I started in personal lines. At Direct Line Group, for example, we had people's test connector data, and we're using that to find shopping habits and how that affected them as drivers and household owners. So that was like something that we used to use. And if you know personal lines over the years, you're not allowed to use gender. You're not allowed to use anything that's a proxy of gender. So not only can I ask someone if they're male or female, I can't even ask them if they do, typical activities. So a challenge, but I think we're out of time. We're gonna
we
leave it at that.
don't have any more time for questions, but Kundai and I will be at our stand all day.
Yeah.
So please come and ask us lots of questions, especially the difficult ones. We like them best. Thank you, everyone.
You need help?